Now look at 5A. Messrs. Satyapal Steels were unable to agree the trial balance as on 31st March 2024 and have raised a suspense account for the difference. Next year, the following errors were discovered. Next year means, so we have already discussed trial balance, that means rectification of errors, stage 1, stage 2, stage 3. Now, this is stage 3. Look at stage 3. What is the important point here? Whenever you are rectifying the errors in stage 3, observe if any nominal account is affected, in the place of nominal account, we use profit and loss adjustment account. Profit and loss adjustment account. Repairs made during the year were wrongly debited to the building account 37,500. Repairs made during the year were wrongly debited to the building account 37,500. Now, generally, what is the rectification entry we record? Repairs account debit to building account. But here, repairs account is nominal account, so that we debit a P&L adjustment account. P&L adjustment account debit to building account. Next one. The addition of the freight column in the purchase journal was short by 4,500. Freight column shows debit balance. Normally, what is the entry we record? Freight account debit. It is short na by 4,500. Freight account debit to suspense account. But in the place of freight account, we use P&L adjustment account. Clear, students? Next one. Goods to the value of 3,250 returned by customer Parth had been posted to the debit of Parth and also sales returns. Means generally what is the entry we have to write? Sales returns account to debit to Parth account. But what they did, they posted in Parth account debit side, sales returns account also debit side. Now how do we rectify it? Observe carefully. Sales returns is P&L adjustment. Now observe. Parth account, normally how much is the amount? 3,250. Earlier Parth account is debit, now we have to credit 3,250. Anyway, Parth account must be credited 3,250. Sales returns earlier debit. Earlier debit. Now it is correct, na? Sales returns correct. So Parth account credit 6,500. Parth account credit 6,500. Remaining P&L adjustment account. Sorry, suspense account. So suspense account debit to Parth account. Sales returns account correctly debited na? Sales returns account correctly debited. So suspense account debit to Parth account. Next. Sundry items of furniture sold for 50,000 had been entered in the sales book. Sundry items of furniture sold for 50,000 had been entered in the sales book, the total of which had been posted to the sales account. Normally, how do we adjust this? Simply, sales account debit and furniture account credit. Here, sales is nominal account. So, what is the entry we record? P&L adjustment account debit to furniture account. Profit and loss adjustment account debit to furniture account. Next one. A bill of exchange received from Comfort & Co. for 60,000 had been returned by the bank as dishonored and had been credited to the bank and debited to bills receivable account. Actually, what is the entry for dishonor of bill? Comfort & Co. account debit to bank. But here, they debited bills receivable account. Na? The adjustment entry is Comfort, rectification entry is Comfort & Co. account debit to bills receivable account. This is simple rectification. Next one. Mr. Sanjay runs a factory which produces tires. Fine. The following details were obtained about his manufacturing expenses. They are asking us to prepare manufacturing account student. Simple, very simple. For the year ended 31st March 2024. Look at. You prepare manufacturing account. Opening work in progress, debit. Closing work in progress, credit. Opening inventory, closing inventory. These two are used in the calculation of raw material consumed. Raw material consumed formula, opening plus purchase minus closing purchases. So by using these three information, we can calculate raw material consumed. Raw material consumed and purchase returns deducted. So 4 information utilized. So what's the formula? Tell me. Opening plus purchase minus returns minus closing. Simple, students. Next one. Carriage inward, debit. Direct wages, debit. Power and electricity, debit. Repairs and maintenance, debit. Depreciation on factory shed, debit. Depreciation on plant and machinery, debit. Sale of scrap, credit. You are required to prepare manufacturing account. Simple. Observe. Opening inventory, closing inventory. Raw material consumed, 1, 2, 3, 4 information. Next, carriage inward, direct wages. See, next to manufacturing overhead, power, repairs, depreciation, sale of scrap, credit. Difference is nothing but cost of goods produced. This is transferred to the trading account. So this is very simple problem, student. Next one, 5C. 5C and 6A is for company accounts, students. Company accounts. Observe. 5C, 6A. Both are for company accounts. Both are for company accounts. Do them carefully. Next, observe. 5C. The books of Rishabh Limited showed the following balance as on 31st December 2024. Fine. 60,000 equity shares of 10 each, fully paid. 60,000 equity shares of 10 each, fully paid. Okay. 36,000 12% redeemable preference shares of rupees 10 each, fully paid. Fine. 4,000 10% redeemable preference shares of rupees 10 each, 8 paid up. 8 paid up. All the shares issued on 1st April 2024. Here we have two classes of redeemable preference shares. One class 12% dividend, fixed rate of dividend, and the second one 10% fixed rate of dividend. One class of preference shares are fully paid and another class of preference shares are partly paid. Fine. Undistributed reserve and surplus stood as profit and loss account balance, general reserve, securities premium, and capital reserve. Fine. They are giving reserves and surplus. For redemption, 6,000 for redemption. What you are going to redeem? Preference shares. Equity shares are not redeemed now. Preference shares. Here we have 36,000 preference shares. At the same time, 4,000 rupees, 4,000 preference shares. Observe, when you have two classes of shares, we assume that the fully paid preference shares are redeemed. When we have two classes of preference shares, we assume that the fully paid preference shares only redeemed. Fully paid preference shares only redeemed. Is it clear, students? So that 36,000 preference shares into face value 10. Total we are going to redeem 3,60,000 rupees capital. So in this case, what we have to observe is, when you are redeeming 3,60,000 rupees worth of capital, you have to replace the same amount of capital. When you are redeeming 3,60,000 rupees worth of capital, you have to try to replace the same capital either by issuing fresh shares or by transferring the undistributed profits to CRR account. This is the Companies Act provision, student, section 55. Next, look at. For redemption, 6,000 fresh shares 10 each are issued at a 10% premium. Look at. Total 3,60,000 rupees we have to redeem capital, minus how many fresh shares you are issuing? 60,000, face value 60. So how much capital is replaced? 60. How much capital we should replace now? 3 lakhs. So 3 lakh, for 3 lakhs rupees you create CRR. This is important point in this problem. At the same time, 12% preference shares are redeemed on 1st January 2024 at a premium of 2 per share. 2 per share. Premium on redemption of preference shares is set off against P&L account balance or general reserve account balance. The whereabouts of holders of 200 shares of 10 each fully paid or not known. Whereabouts of the holders of 200 shares means, see, total we have 36,000 rupees redeemable preference, 36,000 redeemable preference shares. Out of them, a holder who is holding 200 preference shares, we are unable to trace him. So that 36,000 shares minus 200, 35,800 preference shares we redeem. 35,800 preference shareholders, we pay the amount to them. Is it clear, students? Next one. A bonus issue of equity share was made at par. We are also issuing bonus shares. 2 shares being issued for every 5 shares held on that date out of the capital redemption reserve account. Is it clear? Generally, bonus shares are issued to whom? Equity shareholders. How many equity shares we have? 60,000 equity shares. First, whenever you are issuing bonus shares, identify how many bonus shares we have to issue. Simple. Number of shares 60,000. Number of existing shares are 60,000 into what is the bonus share ratio? 2 is to 5 means 2 by 5. 30,000 into 2 by 5. Total 24,000 bonus shares we issue. 24,000 bonus shares we issue. So for that, how much amount we need? 10 rupees each share. So 2,40,000 rupees bonus we need. Is it clear, students? Next one. However, equity shares issued for redemption are not eligible for bonus. Equity shares issued for redemption. See, here we have issued fresh equity shares. They are not eligible for redemption. Suppose if they are also eligible for redemption, then total number of existing shares are 66,000. 66,000. Is it clear, students? Yes. Show necessary journal entries to record the transactions. Ignore date column. Yes. Here there are order of recording the entries. First one, it is better to transfer the amount due to preference shareholders. Entry. Preference share capital account debit. Premium on redemption of preference shares account debit to preference shareholders account. This is the first and foremost entry we record. 3,60,000 we have to redeem. On that we are paying 10%. How much? Per share 2 rupees premium. 36,000 shares into 2, 72,000. Total amount payable 4,32,000. After that, arrange sources and follow the Companies Act rules. Here we are issuing new equity shares. Here we are issuing new equity shares. What is the entry we record? Bank account debit 6,000 shares into how much amount we receive? 11 rupee. So 66,000. Out of that 60,000 capital and 6,000 premium. Next, creation of CRR. For how much amount we have to create CRR? 3 lakhs. For creation of CRR, what is the source? First, check general reserve. The amount is not sufficient, check P&L account balance. In this problem, how much general reserve account balance we have? 2,40,000. Utilize 2,40,000 total. Then look at P&L account balance. P&L account balance we have 160. Out of 160, first keep amount for setting off premium on redemption of preference shares. This is important, students. So remaining, look at entry, general reserve account debit, profit and loss account debit to capital redemption reserve account. Fine. Next one, capital redemption reserve. Yeah. Now amount paid to preference shareholders. On how many shares we are paying amount? Tell me. 35,800 preference shares holders we are paying amount. So preference share capital account debit to bank. After that, bonus issue procedure. What is the first? Calculate bonus. How much amount we have to pay? 2,40,000 rupees. What is the source? We have CRR. How much amount we have in CRR? 2,40,000. The total, sorry, just a minute. CRR we have balance of 3 lakhs. Out of 3 lakhs we use 2,40,000 rupees. For that, what is the entry we record? Bonus, capital redemption reserve account debit to bonus to shareholders 2,40,000. Now issue bonus shares. Bonus to shareholders account debit to equity share capital 2,40,000. Now we have 72,000 rupees premium paid. It is loss na set off against P&L account balance. So profit and loss account debit to premium on redemption of preference shares 72,000. This is the problem, student. So we are expecting for January 2025, we are expecting a question from redemption of preference shares. So be careful, students. In case of redemption of preference shares, two things are very important. One, capital replacement. Second, sources for redemption of preference shares. That means how you are collecting cash. We check on one hand capital replacement, on the other hand for redemption we need a fund cash balance also we have to see, at the same time capital replacement also we have to check. Is it clear, students? These are calculations, you can check it. Now come to 6A. Samuel Limited issued a prospectus inviting applications for 1,20,000 equity shares of rupees 10 each at a premium of 2 per share, payable as follows. Total amount receivable 12 rupee. How we are receiving this? That 12 rupees, 3 per share on application, 5 per share on allotment, 5 rupees includes premium and 4. How many installments we are receiving the amount? In 3 installments. Applications were received for 3,60,000 rupees, 3,60,000 shares. We have issued only 1,20,000, but we received 3,60,000. Oversubscription, equity shares. Applications for 80,000 shares were rejected. See, 3,60,000 minus 80,000. So 2,60,000 remaining. Sorry, 2,80,000 remaining. So 80,000 shares amount we are refunding. And remaining 2,80,000 shares we have. What we do with that 2,80,000 shares amount? And the money refunded. Fine. Shares allotted to remaining applicants as follows. Look at. Now we have total 2,80,000 applications. Category 1 and 2. Number of shares applied 1,60,000 and 1,20,000. Total number of shares 2,80,000. Applied now. To them, generally we allotted only 80,000 and 20. Check. Total not exceeding 1,20,000. Fine. That's it. We have excess money now. Here we have 80,000 shares excess money. 160 minus 80. 80,000 shares excess money. At the same time, 1,20,000 minus 40,000. 80,000 shares excess money. Total we have 80 plus 80. 160. Total we have 1,60,000 shares excess money. Total we have 1,60,000 shares excess money, students. Observe carefully. Now what we do with that excess money? Excess money received with applications was adjusted towards sums due on allotment and the balance amount returned to the applicants. So after adjusting for allotment, whatever the excess amount we have, that amount we refund now. Next, all calls were made duly received except the final call by a shareholder belonging to a category 1 who has applied for 680 shares. We have received total amount, means allotment amount, final call amount, total amount received, but except on a shareholder who belongs to category 1 on how many shares? 680 shares. He has applied for 680. But how many shares we allotted? We have to calculate. His shares were forfeited. Fine. So this is the problem of issue of shares, forfeiture of shares, and the forfeited shares are reissued, reissue of shares. 13 per share fully paid up. Pass necessary journal entries for the above transactions in the books of Samuel Limited. Open calls in arrears account whenever required. In marks, students. June 2024. 6A is given for 15 marks. September 2024, they have given for 15 marks. Now also they are giving for 15 marks. Remaining questions, look at. Write short notes on any two of the following. Here they are giving again alternatives. Internal option. Bills of exchange and various parties to it. Retirement of bills of exchange. What are the advantages of subsidiary books? It is better to write subsidiary books so that you can score easily 5 marks. Now we see the last question. How many installments we have? 3 installments. 3 installments means 3 into 2, 6 entries we have to write for issue of shares. Per feature, 1 entry. Reissue, 2 entries. When you reissue, we get money, 1 entry. Plus, after reissue, we check profit. On reissue, that profit is transferred to capital reserve. Yes or no, students? Yes. Observe clear. Here the important calculation is working note. This is very, very important, student. So look at, students, this working note is very important. Calculation for adjustment and refund. First look at the columns here. First category. How many categories we have? 2 categories. And rejected also 1 category they are giving. Next, number of shares applied. First category 160, second category 120. And how many shares we rejected? 80. Next, number of shares allotted. Number of shares allotted. Rejected, anyway, we didn't allot anything. First category 80, second category 40. Next, amount received on application. How much amount we receive on 80,000 rupees? 3 rupees. 80,000 shares? 3 rupees. 160,000 shares? 480. 1,20,000 shares? 10,80. Here they are giving, get calculations also. Here, next one. Amount required on application. That means second column into application money. In any way, rejected shares, we didn't allot anything. Next, 80,000 into 3, 240, 40,000 into 3, 1,20,000. Total, 3,60,000. Amount adjusted on allotment. See, how much excess amount we have? For first category, we have 4,80,000 minus 2,40,000. 2,40,000 we are adjusting for allotment. Next category, we have 3,60,000 we received, whereas sent to capital account 1,20,000. Excess money we have 2,40,000 excess money we have. But from this category people, we have to receive originally how much? 40,000 into 5, 2 lakhs rupees we have to receive. On allotment, we have to receive only 2 lakhs. But we have excess of 2,40,000 now. So out of 2,40,000, 2 lakhs is adjusted and 40,000 is refunded. 40,000 refund. This calculation important. Total how much amount we are refunding? 2,80,000. Amount due on allotment. First category, 80,000 shares, 80,000 shares into 5, 4 lakhs. Second category, 40,000 shares into 5, 2 lakhs. Total receivable, 6 lakhs. Already adjusted how much? 4 lakh 40. Remaining amount we receive 1 lakh 60. For the whole problem, this working note plays an important role. Clear students? Yes. Entries are easy students. Entries are easy. You get one by one entry. On receipt of application money, bank account debit to equity share capital. Next, transferring application money to capital. So, for equity share application account debit 10 lakh 80 to equity share capital to equity share allotment to bank. Next one, allotment amount due. What is the entry we record? Equity share allotment account debit to equity share capital account to securities premium account. Here you can write 1,20,000 into premium is 2 rupees now, 2,40,000. Capital 3,60,000. Next, bank account debit to equity share allotment. How much amount we receive? 1,60,000. This is also as per table calculated. Next, final call due. Equity share final call account debit to equity share capital account. Next, final call received. On final call, on how many shares we didn't receive money? See, a shareholder to whom 680 shares applied from category 1. First calculate pro rata of ratio of first category. So that is nothing but 1 by 2. That means 2 shares applied and we allotted 1 share. So here he applied for, so when he applied 2 shares, we are giving 1 share, category 1. Now he is applying 680 shares, then how many shares we allot? 680 divided by 2, 340 shares we allot. Excuse me. That means we have not received final call amount on 340 shares. We have not received final call amount on 340 shares, students. Observe carefully. Calls in arrears, 340 shares into, what is the amount due? 4 per share. 1360. Is it clear? Remaining amount we have received. Now what we do? We forfeit these 340 shares. Journal entry. Very, very important entry, students. Forfeit entry. Equity share capital account debit to calls in arrears to forfeited shares account. Anybody can write the entry, but write down the amount. How many shares forfeited? 340. What is a full called up amount? Called up value per share 10 rupees. Total 3,400. Out of that, how much amount we have not received? 1360. Remaining amount we received now, transfer to forfeited shares account. Now these shares we have issued at what price? Look at these shares we have issued at 13 rupees. Issued at premium entry. 340 shares into 13 rupees bank account debit. 340 shares into 13. 4,420 to equity share capital 340 into 10. $340 into 10, 3,400. Securities premium 1020. Now if you observe, forfeited shares account we have 2,040 rupees balance. On reissue, we don't have any loss. we have reissued shares at premium, so that the total amount in forfeited shares account is transferred to capital reserve. Yes or no, students? Yes. Observe carefully. That's it. This is our problem, student. But solving the same problem in the examination condition takes some time. Yes or no? So you have to practice very well. That's it. This is our MTP Series 2 January 2025 attempt, students. That's it. We again meet in a new video. Till then, bye bye everyone. But try to solve MTP-2 Series 2, students, because it contains very lengthy problems and important conceptual problems, students. Don't ignore this MTP-2. Is it clear? Yes. So that's it for this video. We meet again in the next video. Till then, bye bye everyone.
Future.